Okay, so we have had multiple phone calls and emails and social media requests asking where is crude oil going from here? Everybody's, well, anyone that's following crude oil knows that we've seen roughly 20% decline in the last couple of weeks, and a lot of traders are starting to feel like this is a little bit excessive, but we'd like to point out that it might not be quite as excessive as it feels. The oil market's been experiencing low amounts of volatility, at least based on historical standards, and so people have grown complacent in the expectations of oil grinding higher and pullbacks being shallow. But in our opinion, it feels like the market could be setting up for a bit of a shakeup. And the reason that we think that is large speculators, although they've liquidated roughly 40% of their positions, probably even more at this point. We're going off COT data. This is a chart of the COT information that's provided by the CFTC, which is the Commodity Futures Trading Commission. And according to the CFTC, speculators have gone from a net long position of about 730,000 contracts to a net long position of roughly 430. Now this data lags about a week, so to be honest, it's probably in the 300s at this point. But even so, we believe there could be quite a bit more further to go. To put this into perspective, in 2016, when the crude oil market bottomed out, speculators were only holding 160,000 net long contracts. So while I'm not sure that we're going to see that big of a liquidation or that dramatic of a liquidation, there's definitely nothing that guarantees that the liquidation's over. In fact, traders are still heavily long. And we pointed out in the newsletter that we sent to our clients today that not only are they still long, but the sentiment is still relatively bullish. According to Consensus Bullish Index, an index that we follow, roughly 70% of those polled were bullish crude oil 4 weeks ago before the market started to drop. Now we're sitting at about 50-ish, 55% of people bullish. So people are still overall bullish even after a 15 to 17 handle drop in market price. Another thing we like to look at is seasonals. It's important to note that commodities tend to follow seasonal patterns. There are certain times a year where demand is high or low. In the agricultural markets, it's based on crop cycle years or crop cycles, things like that. In crude oil, it's based on mostly demand. Supply tends to be, although supply is not static, it's not something that's necessarily based on an annual pattern. Demand is, for example, driving season. The crude oil market tends to top out in early to mid-October, and then it generally will sell off throughout November and most of December. But ultimately, the lows in crude oil tend to be in February or even March, not December. So even though we may get a technical bounce between now and February or March, the odds are we're not going to see a meaningful bottom, or at least that's what history tells us. Now, keep in mind, seasonals are just a tool. They're not a guarantee. Most years they occur, not every year. Sometimes they're early, sometimes they're late. So don't fall under the false pretense of if you follow seasonals, you can never lose money, because that's absolutely not the case. So let's take a look at a crude oil chart. And this is what might surprise a few people. Although this sell-off feels massive and painful to anyone that's on the wrong side of it, if you take a step back and look, it's actually quite modest compared to what we've seen in the past. Crude oil is not, it's not the stock market. It's not a low volatility dividend investment. It is a harsh environment. It's treacherous. So if you're going to speculate in crude, you have to understand that you're going to see some extremely volatile moves. In fact, if you look back in 2014 through 2015, as you can see in this, actually I take that back, 2014 through 2016, as you see in this chart, I've got them outlined in the red boxes. There's been on 3 occasions in that short period of time where crude oil roughly lost half of its value in a short amount of time. So the current collapse, we've gone from roughly 77 down to 60-ish. It feels like a huge move, but historically, it's actually not that big of a deal. With that said, we are coming up against some pretty swift support around the $59 area. I'm not saying we're going to break this area, but I am saying you should be very aware that there is a real possibility, based on our guesstimates, and these are guesses and speculations, we believe there's roughly a 60% chance the market melts through 59. And if that happens, really there's nothing stopping it until we see the low 40s. So would we bet the farm that that's going to happen? Absolutely not. But would we be prepared and aware of that and adjust accordingly? Yes. So if you're the type of person that's thinking of going big on the upside of crude, I'm not saying that you shouldn't buy any crude or you shouldn't be bullish at all, but you should definitely consider the fact that there is a better than small chance that we break through and things get ugly. Even uglier than what we've already seen. Now, on the flip side, if 59 holds, you can see there's a nice uptrend channel that we've been forming since 2000, starting in roughly 2016 on those lows in the 20s, which was pretty painful for a lot of people, I'm sure. So the market's rallied from 20 in the mid 20s all the way up here to 75. That's pretty incredible on its own. If we do hold the 59 area, which keeps that trading pattern intact, the next logical price point would be $80 a barrel. If that happens, I mean, our models and our analysis doesn't necessarily work on time. It works on price and volatility. So it's hard to say when 80 would occur, but I would assume that it would be later rather than sooner, because as we mentioned, the seasonal uptrend doesn't even start to really come into play until early next year. On the flip side of that, if our inclination is correct and 59 support does break, and we do see the low 40s, I believe that would be a spectacular opportunity for the bulls. And I would not expect to see a slide into the 20s again, although in crude oil you can never say never. The thing about being a commodity trader, and specifically a crude oil trader, is you always have to be prepared for the unthinkable to happen, because it happens quite often. Again, refer back to 2014 here in this chart. Crude oil dropped from 105 down to 40s and then eventually into the 20s. So you can never say never when it comes to crude oil. If you are interested in learning more about trading futures and options and strategy development and those sorts of things, as well as market analysis, some of the things that we talked about today, I highly recommend, of course I do because I'm the author, Higher Probability Commodity Trading. I discuss all of these things in this book. You can buy it at any bookstore, but it's cheapest on Amazon. And if you would like to take it a step further and you want to receive information such as the video that you're watching in written form in our newsletters, we do recommend trading recommendations as well as commentaries such as this. Visit our website, it's DeCarleyTrading.com. Scroll down to the middle of the page and you'll see a red bar. It says sign up here for newsletters. If you click on that bar, you simply enter your information and you're good to go. Thanks for joining us. I hope you got something out of this video.